The United States of America. For decades, treasuries were seen as the safest gold standard of global finance.
The new year raises big questions for major economies around the world. What is the outlook for growth in 2025? With the breaking news, a fresh trade war between the US and China has just kicked off.
Traders may want to put on their hard hats. That's because US markets picked up where Japan left off, and the global stock market.
Tariffs 25% on Canada and 25% on Mexico, and that'll start.
But now a wave of bond sales from 16 allied countries, ranging from Japan to Saudi Arabia and even Britain, suggests that Washington's long-standing credibility may be in question. Some wonder whether the world's largest economy, the champion of the petrodollar system, is facing a rupture that seemed unthinkable just a few years ago. Could this be the first real sign that America's unmatched energy dominance and financial power is entering a new phase? Interest rates are rising, United States public debt continues to grow, and allies once content to hold heaps of United States bonds appear to be looking elsewhere for safer or more profitable alternatives. Is this a simple reaction to short-term market volatility or the beginning of a broader migration away from the dollar-based system? As Washington tries to project confidence, the lure of alternative reserves, gold, yuan, even crypto is attracting more and more global attention. Saudi Arabia's pivot to China, Japan's portfolio realignment, and the United Kingdom's post-Brexit financial strategy are all intertwining, posing a complex challenge to American hegemony. The question is whether these bond sales will turn into a real crisis, undermining America's borrowing costs and fueling uncertainty far beyond United States borders. Let us take a look behind the scenes of this dramatic development. For years, United States treasuries were seen as the world's safest haven. Allied countries such as Japan, Saudi Arabia, and the United Kingdom were holding huge amounts of United States bonds, securing their reserves and strengthening their strategic relationship with the United States. However, the data coming out in recent months has turned this picture upside down. While Japan's bond stock is rapidly dwindling, Saudi Arabia is allegedly dumping its bond holdings as a result of political tensions with the United States. There is a similar trend even in close allies such as the United Kingdom. What are the reasons that triggered this sell-off? The first reason that comes to mind is the growing budget deficit and the huge public debt burden of the United States. The issue of the reliability of United States Treasury bonds, which has been discussed many times before, is back on the table. Some experts say the value of bonds falls as interest rates rise, so countries do not want to take losses. Others warn that confidence in the United States dollar system is being shaken and the world is looking for new reserves. There are even reports that the petrodollar system is being questioned by Saudi Arabia. So, how does the United States Federal Reserve's high interest rate move affect bond stocks? As the United States Federal Reserve sought to contain inflation by raising interest rates, the dollar was expected to strengthen against other currencies. However, falling bond values may make this strengthening unattractive. Higher interest rates negatively affect the price of existing bond stocks even if the nominal yield on bonds increases. Investors, who see losses instead of profits in the short term, think, if this situation continues for a while, it is best to sell my bonds and turn elsewhere. In many countries, discussions on switching to non-dollar assets continue. Gold purchases, UN reserves, and even crypto assets have become part of this equation. These concerns are gradually turning into concrete steps. The collective bond sale of 16 allied countries created an air of panic in the United States. The collective bond sale sounds like an economic and diplomatic snowball effect. If the wave of sales that starts in one place encourages other countries to follow suit, the cost of borrowing in the United States will rise rapidly and a crisis in the public budget may be triggered. From the outside, there are still many who say, the United States is the world's reserve currency anyway, no one can completely give it up. But factors such as the United States debt ceiling debate between 2023 and 2025, the Biden administration's spending, and Washington's unpredictability in foreign policy are creating mistrust even among allies. With the thesis that America is always a safe haven being shaken, no one is as comfortable as before. What about the political dimension? Thanks to its long-standing oil-dollar partnership with the United States, Saudi Arabia saw its bond holdings as strategic leverage. Recent tensions between Riyadh and Washington, particularly over OPEC plus policies, human rights issues, and regional conflicts, have caused the Saudis to distance themselves from the United States. Not only in Saudi Arabia, but also in Gulf countries such as the United Arab Emirates and Qatar, there is a growing sentiment that we should cooperate more with China and Russia. This shows that dollar bonds are not as indispensable as they used to be. On the Japanese front, there is a completely different dynamic. For a long time, Japan was the biggest buyer of United States bonds. Even as the value of the Japanese yen weakened, the Japanese government invested its money in United States Treasury bonds. However, the revitalized economic policies, increased defense spending, and the rising interest rate environment may have pushed the Tokyo government to reduce its bond positions. Moreover, the tough China policy pursued by the United States in the Asia-Pacific is straining regional balances. Japan is, of course, one of the most critical allies of the United States, but perhaps it is moving to a strategy of let us diversify the portfolio. Let us not just load up on United States bonds. This raises the question of whether Japan took this decision purely for economic reasons or whether there is a political message behind it. The fact that the United Kingdom is also among these 16 allies leads to jokes like even its own mother is abandoning it. The London administration, which has been acting shoulder to shoulder with the United States within the framework of special relations for a long time, is trying to strengthen and diversify its own financial centre in the post-Brexit period. Therefore, it may want to sell its bonds, turn to different investment channels, and diversify its foreign exchange reserves. Some analysts say this has more to do with economic realities than the United Kingdom's trust in the United States. Others argue in the bigger picture, Europe and the United Kingdom are no longer as dependent on United States global leadership as they once were. As a result of all these developments, one wonders what Washington's reaction will be. The United States Treasury Department calls for restraint, saying, "We still have the deepest and most liquid bond market in the global market, and small fluctuations are normal." But it remains to be seen whether the 16 countries simultaneously starting to divest is a minor fluctuation or a harbinger of a major earthquake. Of course, in reality, they are not all conducting a synchronized operation. Each country has its own motivations. Nevertheless, the coincidence of timing is turning into a wave of cumulative bond selling. There is a fear in the stock markets. If United States interest rates rise, will there be a new crisis? If United States interest rates rise rapidly, developing countries dependent on dollar financing will suffer, and the risk of global recession will increase. In other words, there could be a chain effect. Does not sound very encouraging, does it? Some experts find it exaggerated to paint a picture of a United States collapse. They say, the dollar is still the world's main reserve currency, the United States economy is huge, its military and technological superiority remains. Of course, its bond position may decline for cyclical reasons, but no one will give up completely. On the other hand, developments such as China and Russia's gold stockpiling, BRICS countries' efforts to establish a non-dollar payment system, and Gulf countries winking at yuan-based oil sales keep the question, is the end of the dollar era approaching alive? Now that the 16 allies issue is added to this, alarm bells are ringing louder. The Biden administration, on the other hand, is supporting the Federal Reserve's moves to rein in inflation while focusing on stable growth and overcoming the debt ceiling problem. But are allies looking for new solutions to the United States debt crises? In recent crises, the United States administration has always repeated the thesis that our debt is the safest harbor because we always pay it back. But the debt ceiling domestic politics repeatedly turned into a crisis, risked a government shutdown, and threatened its credit rating. The rest of the world watched this domestic political theater with concern. Now, many allies, from Japan to Saudi Arabia, are thinking, maybe it is time to formulate an exit strategy. Yes, the United States collapse may have been exaggerated, but the idea of relying only on dollar bonds may not be as attractive as it used to be. Finally, let us conclude with a look at geopolitical factors. Saudi Arabia is making energy deals with China, and the petroleum rumors are getting stronger. Japan is economically dependent on the huge Chinese market, despite its friction with its neighbor China. Europe, on the other hand, is seeking its own strategic autonomy in the long run, even if it seems to be forced by the energy crises and the war in Ukraine to stand closer to the United States. Britain is searching for a post-Brexit identity. This picture leads to the conclusion that the United States is still powerful in the world, but not the undisputed leader it once was. The bond sales are the financial reflection of this picture. It is a multi-dimensional chess game, is it not? How do you see these developments? Are the bond sales by countries that the United States calls close friends really the sound of a major collapse? Or are they just the result of interest rate and market fluctuations? Is there an alternative to replace the dollar, or will the reserve currency's throne be shaken but not overthrown? Some say a country with so much debt still cannot be trusted forever, the world must move to a new system. Others say there is no need to panic, America will bounce back. What do you think? We look forward to hearing your thoughts in the comments. Please do not forget to subscribe to our channel, turn on your notifications and hit the like button. Goodbye for now, but keep an eye and ear on us.